Assalamu alaikum, ladies and gentlemen. Thank you very much for coming back after lunch. I hope you all enjoyed the sandwiches. Our team member Imran Bhuta was responsible for the sandwiches, so I'm just giving a shout out to him. Thank you very much for that. All jokes aside, my name is Daniel Ahmed. I welcome you all to our conference. I'm the president of the Islamic Finance and Ethics Society and a final year student at King's College London studying political economy. It was only a year and a half ago when King's and SOAS's Islamic Finance Societies merged. A few months later, we became a consortium by expanding into LSE and Cass Business School as well. And the discussion has flourished since then. We've reached many milestones. We've hosted a number of prominent speakers. And we now reach this conference. And yet the question still looms in the background. Can finance be socially conscious? This panel will explore the premise which founded the society, which was on finance and whether finance can be socially conscious. Before we begin the panel discussion, I'd like to give some background information on our speakers. We were unable to have Dr. Mehmet Asute here today because of a family emergency. He's had to go to Istanbul, and our thoughts and prayers are with him. The first speaker I'd like to introduce is Omar Sheikh, who I'm sure most of you are aware of. He's on the advisory board of the UKIFC and aids the government in policy advisory. He's been at the forefront of establishing the UK government's strategy for making London the capital of Islamic finance outside of the Muslim world. Secondly, Haris Irfan, who you all are aware of now. He's already been introduced and very well known. He's kindly agreed to be on this panel as well because of Dr. Mehmet's absence. His experience from within the industry will, I hope, give us a unique insight on whether finance is indeed just about the bottom line or if it can be more than that. And last but not least, we have Shehroz Khan, who's from Made in Europe, who are an NGO that are working to fight against poverty and are promoting social justice. So coming back to the question at hand, the global financial crisis that occurred a couple of years ago has shown how divorced finance is from the real economy. And unlike an earlier generation who separated philanthropy from the daily vocation, our generation seeks employers who integrate values into the business. Will this push finance to be more socially conscious? And if general finance is unconscious to society, then is Islamic finance, by effect, also socially unconscious? I'll open up the floor now. I'd like to hear the views of Omar Sheikh, Shehroz Khan, and Haris Irfan, and then we'll have some Q&A discussions, inshallah. So, if you'd like to start.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullah. First of all, it's an absolute honor and a pleasure here to be here amongst such talented students and esteemed company. And I'd like to thank and congratulate the team at IFES for putting this event together. Knowledge, education, sharing, networking is critical and key to building movements, to building relationships and increasing our knowledge. So well done. The importance of this event should not be underestimated. I am going to reduce my presentation considerably and shorten it with a view to give you more time for Q&A, because I think the earlier sessions have demonstrated the importance of that, and I don't want this session to overrun with respect to the other speakers and all of you. A few points I'd like to make on the topic, and then happy to expand over the Q&A session, is number one, when you say can finance be socially conscious, that comes from a specific ontological position in the first place, which is very different to where the Islamic finance understanding comes from. And I think this is a very, very important starting point. We heard earlier on today about people over profit or profit over people. We all hear about the discourse around unchecked capitalism. I think what's important for us as Muslims in the audience to understand is how we create our wealth, how we spend our wealth. All of these are equally important. So yes, free markets and profit is encouraged. Indeed, I would say loss-making is somewhat irresponsible, but there is an additional element to that. And I sometimes try to frame that in the concept of barakah, right? Have you all heard of barakah, the Arabic term? Yeah, you're all familiar with it. So if I can translate it loosely it's into blessings, word is blessings. And very often you will hear from scholars that £100 or £10 with barakah is worth a lot more than £1 million with no barakah in it. Yeah? So if you cheat and steal, or you mis-sell to someone and you earn $1 million, hey, fantastic for you, for your numbers, yeah, for your calculator. But if you work the hard way, you strive, and you do it socially consciously, without stealing, without cheating, without ripping anyone off, with ihsan, you might only end up with $1,000 profit. But that $1,000 is better for you than the $1 million. Yeah? And that fundamental position is because we believe in an akhirah. We believe that there is a hereafter. We believe that we are accountable for every penny we earn, how we earned it, and how we spend it. That straight away, to me, reflects very well on contemporary movements around social returns. Yeah? And I would say you can't put barakah into an Excel sheet, right? Okay? So when you do your IRR calculations, I work in the private equity field, so when we do IRR calculations, you can't really say, yes, that sticks in really well into, we'll discount barakah on this investment for the next 7 years, right? It doesn't work that way. It's a fundamental belief. Yeah? You either have it, or frankly, you don't, right? And those who watch Wall Street, lunch is for wimps, that's fine. Greed is good, yeah? That's fine, so be it. Whatever you choose, it's your own decision, it's your own personal choice. But within the Islamic ontological framework, we have this understanding and importance that actually which in a way unravels the question of this being socially conscious, or finance being socially conscious, because it's not a choice. It's not something that you can engage in financial activities which are harmful to people or to society. Now, taking this in context of the letter that you've written to the Islamic finance industry in here, and the broader the debate, I understand what we're saying. What we're really alluding to here is the creeping cynicism within Islamic finance, and it's the aspirational dissatisfaction, as I've referred to it over the last 7-8 years. I think it's important to put some context on here. First of all, Islamic finance, as it is socially conscious. Yes, there are principles which are different. Yes, there is a fundamental set of principles which differentiates it from conventional banking. That means that none of the Islamic banks were involved with subprime mortgages. None of them are involved with hedge funds and highly toxic derivative assets. None of the takaful companies, none of the Islamic pension funds, none of the Islamic investment firms were invested in any sector deemed harmful to society, which includes pornography, alcohol, tobacco, gambling. So yes, in one sense, they are socially conscious, and that's practically evidenced in what I've just said. But at the same time, there are challenges. There are challenges of overly synthetic structures in Islamic finance, which are replicating interest-bearing loans structures, commodity muraba, case in point, and its close cousin, I call tawarruk. But there needs to be also an understanding here whereby you put this in a context. If we go under the Sharia position, everything is halal except that which is specifically haram. Okay? Now, I've learned this from the scholars, and we have scholars in the room who can expand on this. But if we start from that position, what we're saying is this world of finance, it's not all haram in the first place. There are certain activities, there are certain sectors which are haram. Even if you go into banking. Yes, I come from a family, my father's been in banking for many years, and we've been debating Islamic banking since the early 90s and mid-90s, me just as a teenager in those days with him. But there are certain elements there which are not necessarily haram. If you look at the investment banking activities, if you look at research, corporate finance, M&A side, where I've worked, if you look at the research analyst positions, where I've worked, if you look at trade financing, traditional merchant banking activities are actually somewhat, more allowable as fundamental activities there. Yes, of course, they all have shades. The whole system has shades and dust of riba, which we know from the prophetic hadith will be the case towards the end of time, right? So you can't say in any way that any activity, be it asset management, be it in banking, be it in the alternative investment sector, that it's not impacted by riba. Of course it's impacted by riba. We know this even how you calculate your returns or how you benchmark your returns. However, there are certain activities there which I would say, first of all, actually are somewhat allowable, relatively, compared to just sitting there selling run-of-the-mill junior term loans, senior term debts, interest-bearing mortgages, and so on and so forth. Now, also layer on top of this that what does that mean? And if I say to you, there is an expectation somewhat, and also an expectation gap or an education, and awareness gap within the market. If you go down here in Holborn, you go to McDonald's, you get a Big Mac. If you're a Muslim, you actually can't, right? Because it's haram. Now, if you go to McDonald's in Dubai, guess what? You can buy a Big Mac, right? Does it taste the same? Yes. Does it look the same? Does it smell the same? Does it even do the same damage to your stomach? Probably does, right? But one's halal and one's haram. And that's important for you all to understand, that it doesn't mean that the output necessarily has to change. The process by which you get to that output in certain scenarios makes it halal, right? Whereas on the other end, if the process is not followed, it can make it haram, even though you get to the same endpoint. Now, that said, the Islamic finance industry, its principles, and I'm trying to contextualize and balance the debate here somewhat, its principles does favor a more equity-based environment as opposed to a debt-based environment. And that does have very real different alternative outputs in society. The biggest difference between equity and debt, you all know, is that you're exposed to profits and losses, yeah? Whereas in debt-based financing, you're not exposed to the upside. You've got your interest rate, and that's that, and you've got security over assets and security over the borrower's mother's assets as well, right? But in equity financing, at a very basic level, if you just take venture capital or you take growth cap private equity, if the business doesn't do well, you don't do well. And there are macroeconomic implications of this, which includes, as the economists will tell you, the shortening of the gap between the rich and the poor. The sector is very young, and the scholars have tried to be pragmatic, right? You can, again, it's very easy to take pot shots at the scholars. We were doing it in Bahrain 10 years ago, scholars for dollars, X, Y, Z, and there is, a reason for that. But they have tried, a number of them have tried, and put in a lot of effort to try and address some of the issues, and in varying ways come together to try and develop the market. And you have to, again, put this in context. As a Muslim community, we can't even agree what day Eid is going to be, right? We're still arguing over whether you sighted the moon or not, yeah? America and Russia's gone and landed on it, and we're still arguing about we can't even see it, right? So let's put this in a context. So don't be surprised when certain products, some scholars say are haram, and certain products, some scholars say are not so, not the case, are halal. So there is an attempt, they are trying, but you have to be very pragmatic. And again, this has to be in the context of what was mentioned in the earlier session of riba being widespread. But moving forward, if I can conclude my initial remarks, is I think, yes, there is aspirational dissatisfaction, particularly amongst young people in Islamic finance, but also amongst a lot of practitioners in the industry. I made a conscious effort myself a decade ago that if I'm going to remain in this industry, I seconded to EY Bahrain, where we had a dedicated team around 10 years ago to work in the sector. Because it's a lot, the UK market is fundamentally shallower compared to what we have in Malaysia and in Bahrain. And I'd advise all of you, no matter what stage you are, if you want exposure to Islamic finance, get out to those jurisdictions. You find a lot more activity. I learnt more in the 1 year there than I did in the kind of subsequent 5 years here in Britain, working in that sector. So I would say there is the opportunity, commercial, but also from a positioning perspective for Islamic finance to build more bridges and move more into the kind of ethical, social, and governance side. Notwithstanding, of course, the ban on riba, which Mushtaq alluded to earlier. And you have to remember this ban on riba is not Muslim, right? You do know that, yeah? The ban on interest, or usury, however you wish to describe it, and the theologians can debate this, is not exclusive to Islam, right? As Sheikh Saleh Kamal has said many times, we made a mistake. We should have called it Abrahamic banking, right? Interest was banned from the Christian church for over 200 years. So I would advise everyone to go and have a look as to why that was the case and how intereste, as the word explains in Latin, how it crept back into the church. Indeed, the problem of banking that we see is not the fundamental issue of fractional reserve banking or the alchemy, as Mervyn King is talking about it right now as he launches his book next week, is not an issue peculiar to Islam. It's an issue which is relevant to everyone in society. This is why you had people like the founding fathers of America, Abraham Lincoln, talking about bankers being more dangerous than standing armies, right? So there's a context, a bigger context, a bigger understanding here that needs to be given to frame this conversation that we're having. Islamic finance is very young. It does have a set of ethics. It does try to implement them, but there's a lot of aspirational dissatisfaction, and there's a lot of attempts, and there's a lot of activity in the synthetic space, which is unfortunately imitating rather than innovating. And I think that's where the opportunity lies for Islamic finance. It lies for it to genuinely cross over to this broader understanding, especially for us here in the Western world, I'd say. The opportunity lies for it to cross over to the broader market of ethical finance, to share those values, not to sit and say that we've got the answer to everything, but actually to say, we've tried, we've attempted. By the way, the Islamic funds, equity funds, have been top quartile performers for the last 5 years. Let's talk, right? Let's sit and understand how we can listen, learn, exchange with social impact investment, with ESG investment, with carbon neutral funds, and so on and so forth. And if you look at that, that's particularly interesting, because that is the world where we're beginning to, if you look at impact investing particularly, which is positive screening, that's the world where we're beginning to try to define social impact, yeah? And bring a financial value, attribute a value or a behavior to that social impact. And Haris mentioned this earlier, but I think technology is the massive leveler here. That this generation, all of you who are, most of you are comfortable with technology, millennials, where you actually will have the visibility and the ability to make that choice through a technologically empowered platform to decide where you want your money lent. The problem we have today is we go to the bank, we don't have the choice to say to the bank, no, you're not lending my money, you're keeping it safe, right? Or to say to the bank, actually, if you're going to lend it, I want you to lend it to my local greengrocer, or to my local Muslim school, or to my local homeless shelter, yeah? I don't care if you give me 3% return as opposed to 5% return. I don't mind, that's my choice. We've never historically had that. The intermediation role of banking traditionally has never, ever allowed that. Now we're beginning to see challenger banks like Triodos and others who are beginning to work on this concept. And I think technology is the biggest enabler here that can genuinely integrate these two different parameters and give the choice to all of you as people where you want your money managed and invested and lent.
Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alamin. Wassalatu wassalamu ala Rasulih al-Kareem. Sorry, I'm starting to lose my voice now, so I'll do my best. Once again, I'm aware that we're running behind time, so I will make this really brief. And all I want to do is to share an anecdote with you. I share this anecdote a lot, so I apologize if you heard it before. And I think it demonstrates the spirit of what we're trying to achieve. So to address the question specifically, can finance be socially conscious? Some of you may be aware of a very famous scholar in Islamic history, a man who became known as Imam Abu Hanifa. In some senses, you could say he was the grandfather of Islamic economic thought. As we know, the Islamic economic model is based on a codification of a body of jurisprudence, which we call Sharia. And that itself is based on the principles which are enshrined in the Word of God through the Quran and in the actions and saying of the Prophet ﷺ. And this body of law has been codified by men like Imam Abu Hanifa. And let me give an example of the manner in which an individual like him operated. He was a textile merchant in the town of Kufa, and a woman came to his shop to sell him a garment, a silk textile. And she said, I want 100 dirhams or dinars, I think it was dirhams, 100 dirhams for this. And he said it's worth a lot more, which is of course a strange thing to say when you're buying something at a cheap value. And she said, okay, I'll offer it to you for 200. And he said, no, it's worth a lot more than that. So she said 300, and he refused. And she said 400, and he refused. And then she turned to leave the shop because she thought he was mocking her. And he said, no, wait, come back. Let's get an independent merchant to value this garment. And they called an independent merchant who valued it at 500. And then they settled on a trade, Imam Abu Hanifa and this woman. which gave him a reasonable profit and her a fair trade. This was an individual who helped to codify fiqh al-mu'amalat, the body of law which deals with interactions, with transactions, which may include financial and commercial transactions. So the Hanafites, his followers, were inquisitive and liberally inclined, and they used their intellect and knowledge to create new instruments which were transmitted down the Silk Route into southern Europe. And these instruments were things like paper money, suftaja, letters of credit, hawala money transfer, sak, the word check comes from the Arabic sak, for which the plural is sukuk, which we hear a lot. So this was an individual who believed in the free market economy. There's nothing wrong with the profit motive. And yet he understood that it was necessary to protect the vulnerable. And that, I think, is the basis of the Islamic economic model. So I'd like us to keep that in mind whilst we consider the rest of the discussion.
In the name of God, the most gracious, the most merciful. Assalamu alaikum wa rahmatullahi wa barakatuh. May the peace and blessings of God be upon you. I want to start by thanking LSE and IFES for inviting me to speak on this esteemed panel. Thank you to the panel. Thank you to everyone who's making this happen. It's a very important discussion, a very important conference as well. I don't come from a background in finance, and my organization doesn't pretend to be leading experts in Islamic finance or any kind of ethical finance either. So I'm going to leave that to the experts, but what I'm going to be talking about is what our organization does, the idea of social consciousness, and the main question that we as an organization try to address through our own vision and through our own mission, and that's what does an Islamically driven society look like? So what does a society that's driven by Islamic principles and values, what does that look like? So in order to address that question, we came up with a number of things that we wanted to do as an organization. So MADE, for those who haven't heard of it, is a charity. We're about 6 years old. And what we aim to do is create a world where, you know, the Muslim community or young Muslims are inspired and enabled to tackle issues of social justice, social, economic, and environmental justice. And so in order to address this gap, what we wanted to do was three things, really. One is build leaders, so whether that's through young people or whether that's through our imams and scholars and things like that. We want to build the capacity, train them, educate them on the issues that affect us in our society, whether that's issues of economic injustice or whether that's anything else, and also train them and teach them the opportunities and actions we can take in order to tackle those issues. The second thing is to build our institutions, whether that's more from an educational point of view, whether it's our schools, whether it's our mosques, madrasa groups, youth groups, things like that, in order to, again, affect change in the best way. And the third is to promote ethical or ethically driven enterprise, which we believe is the only real Islamic way to drive our own businesses, our own institutions, or us as individuals. So without going into the Islamic framework very deeply, because I don't come from that background either, lots of our classic scholars have laid down the general principles of Sharia, or the general guiding objectives, the maqasid of Sharia, as five. And that's the preservation of deen, or our way of life, our faith, the preservation of life, of lineage, of intellect, and of wealth. So when we think about those five maqasid or those principles, and we think about how does an Islamically driven society function, if I'm going to look at that question and say, can finance be socially conscious? I'd say, hell yeah, absolutely. It's the only way that it should happen. And what I'm going to be talking about is just purchasing power, and that's at three levels. That's at the individual level as consumers. That's at our commercial level as small and large businesses and corporations, and that's at the governmental level. So on the individual level, I'll give you a very small anecdote. We campaign on workers' rights to raise awareness of the issues and to try and lobby and advocate in whatever way we can. So a few years ago, there was a travesty in Bangladesh, and that was the Rana Plaza building collapse. I think many are aware of it. Some of our largest garment companies, get their clothes sourced from there. And a large factory collapsed, and the day before, people had started noticing cracks in the walls, and this was brought up to the senior management, and nothing was done as a result. The next day, the reports say 1,127, 1,030 people died, many more people injured. It's likely that there were more casualties to that. So there were many people protesting in Dhaka, who went outside these factories and who were, more elderly women. There were a lot of women in those factories, protesting and trying to get their voice heard, and that wasn't being covered, and no one around the world and no one in Bangladesh was paying much attention to that. Whereas in London, when we got, we gathered a few hundred people outside Benetton and outside a few supermarkets, immediately it was covered by the BBC, it was covered worldwide on different press agencies. And it's an idea of our responsibility that we need to think about, that people will listen to our voice because we have a certain, either if it's a position of privilege or a certain purchasing power that we have, and that has the power to really influence some change. That's something to think about. On the commercial level, from small and large corporations, well, I'll just talk about larger businesses because we are living in a corporatocracy where, it is some of the largest organizations and businesses in the world that not only, decide what's on the agenda, but, they're often businesses that fund our political campaigns, that have such a strong lobby and such a strong influence on our policies and on how we as a society function, if we really think about it. And for our corporations to be more, so I know we've spoken about this earlier, and I'm not going to say that we shouldn't be profit driven, but for our corporations to solely be profit driven is an extremely dangerous place for us to be in as a society. Because if we're only thinking about profit, that's not going to be thinking about workers' rights. It's not going to be taking our planet and environmental impact into account. And that's not to say that we shouldn't aim to maximize our profit as businesses and things like that. But it's saying that as an organization, the social aspect of what we're doing needs to be at the center of how we function. And in addition to that, maximizing the profit is an outcome or is an objective as well. And so that's important. And at the governmental level, we know how much impact economic pressure can have, whether it's on other countries or whether it's on different sectors. So we come from a place of advocating to tackle climate change and trying to tackle climate change at every level. Now, if we're talking about the government investing in more renewable energy or those kinds of impacts, those kinds of effects that can only really be properly driven by a government, that's the kind of thing that we're really trying to influence. And we as people, as individuals, have that power to try and influence our governments. But if we're talking about a socially conscious society, this is very much something that the government would be supporting, especially if, for individuals and for small businesses, if this isn't financially feasible. Because at the end of the day, competition drives everything. So if it's not financially feasible, then it is the government's role or an advantage that the government can play in supporting certain sectors and certain enterprises. So I'm just going to end by talking about that specific issue, and then inshallah we'll have time for Q&A. So climate change in itself, it sounds like something vague and broad and something that's quite disconnected from finance. But what we want to say as an organization and why we focus so much on it is because we believe it's one of the most important things that we as a socially conscious society need to deal with. And from a financial point of view, it's one of the most important things that we as corporations, businesses, and governments need to deal with. Because at the end of the day, climate change undoubtedly will create a society where the poor get poorer, and the poor will be driven into extreme poverty as well. And not necessarily the rich getting richer, but the rich will be the only people who are somewhat able to survive, because the impacts that are going to occur on healthcare, the impacts that are going to occur on us trying to just repair social infrastructure and relief work, not taking into account the number of casualties and the social impacts that are going to happen as a result, just taking the financial and economic points into view, this is going to be money that's detracted from things like education. This is going to, almost monopolize, good healthcare going to the rich and good opportunities also going to the rich as well. And so, if we're thinking about being socially conscious as a society, I think this is one of the main things that we as businesses, as individuals, and as corporations need to tackle. And I'll end there. If anyone has any other questions, feel free to ask. Jazakallah khair.
Thank you very much to all the speakers for a very interesting and insightful discussion on this topic. I think it would be good to take some questions for around 15 minutes before we wrap up for the next one.
Yes, I'll start with the first question. I'm assuming that the majority of that 9.5 trillion is in the hands of ultra-high net worth individuals. Given what we know about the gap between rich and poor in society today and the increasing gap between the 1% and the 99%. So I imagine that a large portion of that 9.5 trillion is amongst ultra-high net worth individuals. And knowing what I know about their investing habits, Sharia compliance is a nice to have. It's not an essential. Whereas I think if you look a little bit lower down the economic chain, you'll find Sharia compliance to be a need and not a mere want, mere nice to have. So I think that may be a reason why you see so much money outside of the Islamic financial system. I worked on a transaction many years ago in Mecca, which was the financing of a tower. And it was the first time a Western investment bank had been invited into Mecca to co-lead a transaction of that nature. It was a sukuk, a type of bond instrument, Sharia compliant. And we figured that this would sell to ultra-high net worth individuals because the block size, the ticket size of each of these instruments was very high, and therefore you had to be very rich to buy this instrument. We figured it would be successful because, and quite simply, the private bankers would be selling this instrument to their ultra-high net worth clients because they'd be able to put a certificate on their offices and their walls at home saying, I own a piece of Mecca, with the name of this financial instrument underneath it. And that was a big selling point for them. So there's a kind of a status attached to Sharia compliance at that level of economic wealth. And it also explains why there is such a low retail penetration rate in Islamic finance. Because there's a poor level of education at those lower levels. And there is a suspicion that these are products that are manufactured for ultra-high net worth individuals. Does that answer your question? Yeah. No, one cannot influence what is in somebody's heart. But, you can be brave and generalize that what is in somebody's heart at that level may be different from somebody at that level. And if we don't cater for that level, it may explain why the Islamic finance industry is a mere $2 trillion in size. When in fact, and I said this before, those who have signed up to the UN Principles for Responsible Investment, those numbers add up to $59 trillion, 30 times as much. So I think we're doing something wrong at that level.
Yeah, so I'm going to keep this quite short because I think you're right. What I was implying was that corporate responsibility isn't enough. I think often it's an add-on to lots of these organizations, and what we need to see is an organization that is built on those principles and that showcases that within their ethos. And the way you see that is from the culture of the organization. What are they really encouraging themselves and their employees to be like? Is environmental sustainability, workers' rights, all those kinds of things, is that at the heart of what they're doing? Like, we have organizations that have fair trade certified chocolate, right? But then they'll have their bases in like illegal settlements. You know, that we have a lot of those kinds of examples. And so, yeah, sure, you can get a label that shows that, yeah, some of our workers were paid a stipend which is above what other chocolate, cocoa farmers are getting. But at the same time, if you're going to be stealing water from different parts of different villages and then selling it back to them, like that's hypocrisy. And there's many examples of that. I can also send the organization a large list of these things. You can go on Ethical Consumer as well, which is a good magazine which rates different organizations and their ethical impact. But does that answer the question more? Yeah.
The FCA in its report has stated that with the 200 million pounds which was invested in Sukuk in 2012, and they've estimated the total income to be over 300 billion pounds. And right now,
I didn't understand that. Can you rephrase that?
With the investment from the very beginning, about 200 million pounds from the government funds, the FCA in its report have stated that they estimate the overall income from the Islamic finance to be over 300 billion pounds. So right now there is no such certainty in prediction of such numbers. Don't you think that probably before introduction of Islamic finance on the UK national market, it should have been provided some work on legal, social, and financial levels in order to create the environment for the Islamic finance to prosper? Thank you.
Just going to I'm not sure about the numbers you're quoting about. Maybe they're trying to say a 200 million investment has a net impact of 300 billion. I'm not sure on that first part, but on the latter part of your question, the legal, social, and so on, the markets are there to drive themselves. The government doesn't necessarily have a mandate to walk into every market and support it and endorse it and so on. This is a small niche market. The government did get involved in the manners that were described earlier today. And what was interesting, which wasn't mentioned this morning, was the late Sir Eddie George from the Bank of England. When he started his initiative to facilitate Islamic banking in the UK, it wasn't the issue wasn't that you couldn't get Islamic financing. You could get that. The bank could buy a property for you and sell it on to you, but it was using a murabaha structure which was triggering consequence of double stamp duty. And there were a few other nuances. So what they were trying to do is create a level playing field so you don't have to pay tax twice. That was the essence there. But what was interesting is Sir Eddie George was influenced by who to do that? He was influenced by a Muslim neighbor he used to have when he was a junior member of the Bank of England. And it was a Bangladeshi woman, if I remember correctly, who used to say to him that I will pray for you to become the head of this organization, i.e. the governor of the Bank of England, right? But when you do, please remember us that I can't buy my own house because I don't have any Islamic financing options, and riba is haram. It's a massive haram. It's not a small haram, so I can't engage in that. And home ownership in British society is different to European continental society, is very much part of that fabric. Now, to ask the government to then go, so in that sense, the government has done a lot in its legislative side, particularly in the tax side. It's done a lot in promoting Islamic finance internationally, but it's the requirement of the market and the market stakeholders, our own community locally, to increase education and awareness and to increase uptake in Islamic financial products. I mean, many people might sit here and say, oh, not convinced by Islamic banking, not sure, but how many of you have actually gone out to an Islamic bank and tried to take on a product? If you're dissatisfied with that product, and I'm talking retail here, my comments, how many of you have written to an Islamic bank and said, you know what, like this element, but this bit, just don't like it, not happy with that. If you can change that, I'll buy your product. And by the way, here's 10 other of my family members or friends, we will do that as well. And I sit on the board of the Islamic Finance Council, so not-for-profit body that's established to help develop the sector. And we get a lot of emails, calls coming in regularly. And what I've noticed is we don't take enough action going forward to the banks to highlight these concerns in a structured, systematic and formal way. So I think that it's the responsibility of other stakeholders within the market to do a lot more, to educate people, to increase the dialogue, the discussion, to trial and R&D and test products, and to convince the Islamic banks at the retail level to do that. The UK government also did issue the FSA issued a pamphlet explaining Islamic finance. David Cameron, in front of 30-odd ambassadors from OIC countries, made a commitment that every UK government department will have to consider the implications of Islamic finance in their activities, which as a result also included the student loan consultation process, which is now closed, and I think next year, 2017, should be, hopefully, they'll launch Islamic student loans under the current loan system. So there is a considerable amount being done there, but I think our own community hasn't got up and risen to the challenge. Very, very easy to criticize, very easy. What are you doing to organize yourself in community cooperatives? Look at the Mondragon communities, look at other benchmarks, non-banking alternatives. What are you doing to address that? What are you doing to lobby the banks and to say to them, well, actually, we will do this on this condition? I think we're not doing enough.
Climate change, of course, is becoming a really big issue, specifically because of extreme weather being more common, flooding, droughts and stuff like that. So I wanted you to see your comments on if this linear growth model for in finance is really sustainable, specifically talking about, because we've got finite resources on this planet, you know, it's only one planet, and things like copper, oil, coal are definitely in the next few decades is seen to be running out. Oil and coal in the next, by the end of the century. So I wanted to hear your thoughts on that, and your thoughts on an economy based on growth, based on not just GDP, but an alternative would be a circular economy model, and taking into considerations not just things like GDP, but the prosperity of the society and things like that. Sorry if that didn't make sense.
Yeah, thank you very much. So I'm going to say something that we probably all learn in kindergarten, or do you call it kindergarten in the UK? I didn't go to school in the, yeah? Okay, so what you probably learn in kindergarten, and those are the 3 R's, so reduce, reuse, recycle. Did everyone learn that? Okay, great. So I think that's a really important concept, because what we're advocating means we're talking for societal change. It's literally for people and organizations, businesses and governments, like, to change their outlook. And that's a cultural shift. That's an attitudinal change. Our organization takes the motto that, and it's a verse in Surah Al-Ra'd, verse number 11. It's, indeed, Allah does not change the condition of a people until they change what's in themselves. And so for us, that's what drives us. If we're talking about economic models where it doesn't take into account that we do have finite resources on the planet, that we are talking about infinite growth or you know, constant growth, I think that's very problematic in itself. But we also need to think about the definition of growth, and so it's good that you talked about alternative models not just being GDP, but what does growth look like? You know, especially from a development perspective. You know, like, you can have a society that's maybe more economically developed than another society, but if it doesn't have the same kind of freedoms and rights and those kind of principles, is that really, you know, is that a more a more developed society? So I think that's what we need to do. I'm not going to comment specifically on the economic models, because I don't have that kind of background. But if we're talking about reducing, reusing, and recycling, right? ultimately, what we'll need to do as a society is come up with solutions to this. And the main things that we need to think about, right, are how we produce our food, like our food sustainability, because that's one of the biggest things impacting our planet, impacting us, and leading to travesties in the world, whether it's, human rights or anything like that. We need to think about our energy, because our energy is impacting everything. Because of energy, we may not have clean water in 2040. If we look at the way water is produced and how we actually get fresh water, because there's a limited amount of fresh water on the planet. Like we forget these kinds of things, and it takes energy to recycle this water and for us to actually have drinking water on our tables, right? And then the last thing is this idea of deforestation. Like if we're just going to keep industrializing our planet, it's not going to be sustainable. So what we're proposing, right, is that it's hopefully, and this is for the experts to discuss, it's going to be economically more viable and feasible to invest in things like renewable energy, because this is where we're going to need to be as a planet, as a society, as individuals. We're not going to have the choice. And so, hopefully this is where people will see their returns as well. And that's all I have to say, that, we're talking about what will be economically better as well as socially better.
In fact, I've written a paper on this. You can find it online. We've looked at a lot of studies of incorporating ESG filters, which is environmental, social, and governance filters, into investing. So it's a form of socially responsible investing. And we find that not only is there not a drag on performance for meeting these guidelines on the environment, on governance, on social factors, but actually over the long term, it is a performance enhancer. And we have seen with Islamic funds, for example, they obviously outperformed their conventional benchmarks during the downturn, during the financial crisis, because they had, limited exposure to financial stocks, they had limited exposure to, these so-called toxic assets, and therefore they were able to outperform. So they're more robust over a long-term economic cycle. So if one looks at the ESG industry, which is the ethical finance industry, not including religious considerations, it's not Sharia compliant, but it vaguely, let's say, aims to meet, let's say, sustainable development goals, we can incorporate within finance a social conscious, right? And that's what we're talking about here. How do we practically ensure that finance, which is the lubricant of commerce in society, how do we ensure that it has a social conscious? Well, it's very easy not only to have an attitudinal change, which Shiraz is talking about, but also to have a top-down policy approach from government. So if, for example, the Malaysian government says our largest pension fund, which is the Employees Provident Fund, should from now on allocate X percent, let's say that number's 40%, of its total assets to Sharia compliance, then at a stroke you've added, $145 billion worth of value to the Islamic finance space overnight. If they also say we need those funds to be invested in a way which meets the UN PRI guidelines, then at a stroke you've incorporated a positive screen into your investment criteria. So now you have finance doing social good. You've got funds which are investing in companies which have strong strong environmental policies, strong labor practices, strong social governance, and so on. These are potential solutions to ensuring that finance has a social conscience.
So just on that, that power lies with all of you. If you look at Edinburgh University recently, it was the student movement that forced the endowments of the university to decarbonize, right? So if the employees, what's EPF? What's he talking about? Employee Provident Fund, pension fund of employees. So if the employees get together and make a statement, make a protest, yeah, they can actually go up to the management, and politically, you'll be surprised how fickle they really are. So with the power of social media, the power of connectivity that you have, all of you in this room over the next decade will have phenomenal influence that, frankly, we probably didn't have during our time. But you must use that influence either through your pension funds or through your university endowment funds, or indeed even writing to your bank, and asking for, demanding for these kind of features.
We've spoken quite a few times about people over profit, profit over people. If profits are allowed in Islam and they're encouraged in Islam, then And if we use profits to be the number one, the number one thing, and then we look at society, and that's what social responsible investing is, right? So you have these filters, but then you also look at the profit, and you have that integral aspect of that to be, there has to be a profit for it to be for us to invest in. Is that ever going to be Islamic though? Because an Islamic investment, by definition, has to look at society before profit, in my opinion. I would like to hear what you guys think about that, because society and the effect that this investment will have in society is the number one issue, and then you should look at the profit. What do you think? Profit before society can also be feasible?
I think first of all, the context is here within a commercial venture. Yeah, the context is not of a waqf or of a sadaqah or of a charity or a zakat or so on. These are all parts of the Islamic economic framework which are dedicated purely for society. There is no role for profit. For waqf for sustainability and social returns, there's no role or the profit being recycled purely. So let's first of all say, if the question is relating purely to commercial ventures, loss making is irresponsible. Indeed, having a profitable venture which creates employment, which adds value to society, is absolutely encouraged. But there's not a contradiction between that profit and over society. I don't see it that way. I see it as a must, absolute must, that you have to respect what's going on in society and the consequences of your business activities in society. If you look at the time of Umar al-Khattab, he introduced the first ever market regulator, which was a female, by the way. Yeah? If you look at Governor Zeti, one of the most amazing ladies in Islamic finance today, the first ever market regulator, and one of the activities she used to do was to go around to see people who are polluting the streets, throwing the rubbish in the streets from the businessmen, the traders, and so on. So I don't see this being contradictory one or the other. Actually, you have to be respectful to society in that process, because otherwise the harm can easily outweigh any personal private profit that you make. That's my view. I don't
I think if I were to create a product which was, put social conscience before everything else, then I wouldn't sell it. My customers wouldn't accept it. My management wouldn't accept it. My board won't accept it. My shareholders won't accept it. But if I convince people that the data shows over the long term that if I incorporate these principles, that I will have a more highly performing product, they'll buy into that. And I think that data exists, and I think that's the case. I'm sold on that. So that's the case that I'm putting forward for all the products that I'm trying to produce.
I think, sorry, Haris, on the data, whilst we have some of that data, still early days, what we need to do is present to the market the optionality now, right? Which is, or at a principle level, we shouldn't damage society, we all agree with that. We can go on and make a profit. Now, can we demonstrate, can we give people the choice? Well, actually, and I would love to have this choice, but I don't have it today, which is, can I take 7% return on my money and have the money invested in a school or a healthcare center, or 15%, or let's say 11% return, but invested in the next Louis Vuitton or Gucci handbags or whatever you want to do, right? Both are halal activities, right? But one gives me an element of social returns alongside financial returns. Now, on the one end, you could actually have similar returns on both, which is absolutely fine, but I think the market also needs to have the option to say, I would take a hit on some of my financial returns if I can increase my social returns. So we need, and this is where a lot of students can actually do a lot of good work in measuring social returns. I mean, Sir Ronald Cohen started some of that in Big Society Capital, but I think there's still a big gap to make measures for social returns which are understood cleanly and easily by people in society. And it's a great area for research, where people, once technology gives them the choice, can actually turn around and say, I would actually take a slight less return, but I know this money goes to my local school, or goes to a healthcare center, or goes wherever that is.
We teach this form of economics in universities up and down the country, in fact all over the world, and it's been utterly discredited over the last 7 or 8 years, and yet we continue to teach this. So we continue to teach in economics courses and finance courses and business schools that we should evaluate every project on a net present value basis. But that basis does not take account of the earth not being an infinite resource, which is exactly the point that you've just made. So our basic mathematical models are completely flawed, and we fail to recognize this. So we carry on with the modern banking system as it is, and we tinker at the edges, and we call things Tobin tax and Basel III, and we introduce little finessing of the system. We don't rip it up and start again, because that's too complicated. So unfortunately, the financial models that we use are fundamentally flawed. I don't think that's actually going to change until there's been an even more catastrophic economic crisis than the last one. And that may still happen. Oh, and by the way, students can do something about that as well. Because I know in Manchester, for example, students lobbied the faculty to introduce an alternative economics course, and that's now being taught. So you can do that here at LSE as well.